Hey, welcome. How's it going? We just got the closing bell for today's Wednesday, February 7th. I haven't been able to see the markets or watch the markets for the last hour or two, but the last I saw, it was looking fairly positive. So let's see if that held up into the close. And let's take a look. We'll look at intraday. So it looks like we mostly just chopped sideways for after we made that initial run upwards. We did come down towards the previous close, but we got stopped out at this first purple bar right here, and then we went up, and then we just chopped sideways for the rest of the day. So we did end positive. That's for the QQQ and the S&P. So it looks like we might have gotten a little bit of direction today. Yes, so the S&P 500 moved upwards, and we are approaching this psychological resistance at 500. Where did we close? We closed at 498.04, so about 2 points away from that psychological resistance. So we do have a little bit more to go. Once we hit that psychological resistance, our expectations that we would either chop sideways or we start to pull back towards that EMA 8. But for now, it's looking very good. It's looking very positive, and this is why we don't trade based on our anticipations. We will hedge based on our anticipation, but we don't trade. We don't go into positions based on whatever we anticipate. So we just follow the trend, and as long as that trend is in place, we keep on going in that direction. IWM, or I guess DIA. DIA, it looks like it matched previous highs. And so we are slightly directional, still kind of choppy sideways, but still sort of up. And then QQQ, we already looked at QQQ, IWM. IWM did not make it above the EMA or MA50. So that is not positive news for the small cap stocks. They got stopped out at that EMA 8. So we didn't even make it above to the EMA 20. From here, will it bounce down? Well, we did kind of stay above that MA 50, but again, it's not looking too good for small cap stocks right now. Let's take a closer look at that S&P 500. It is directional. Yeah, it's directional. I would be very, very happy to take longs in strong stocks and just expect the ones that have low volatility, they're moving very steadily upwards. Those are all great positions to be in right now. And then a hedge in place in case we retrace and we break that trend. So let's take a look at any earnings that we might have and see how that might affect us tomorrow. Let's see. Amgen, Chipotle. Okay, so we got poor performance out of McDonald's and Yum Brands. So Chipotle will be interesting to take a look at today after market. I'm pretty sure we already had end phase, right? Today after market. Here we go. Okay, that's better. Disney, McKesson, News Corp, O'Reilly. Disney. Actually, I should be looking on the day trading one. So Disney. Which one did I? Here we go. Okay, so Disney is looking positive so far. We haven't quite hit earnings yet. So this is running up in anticipation of those earnings numbers. So we're not going to get too excited about this movement upwards yet. We have News Corp of America, NWS. No information in the aftermarket. We've got O'Reilly, Paycom, PayPal, McKesson. Okay, McKesson is really moving upwards. They haven't reported yet. At least I don't think they have. So this might be jumping the gun a little bit, but that is a really strong movement upwards. We've got O'Reilly. Might be a little too early because we just closed. It's a little too early to be looking at these, but at least we get an idea of where people are leaning, even if the event hasn't happened yet, because we can see that we've, at least on a couple of them, we've seen those really big green bars. before the actual announcement. Paycom, same thing. PayPal, a lot of so PayPal actually did announce, but it's getting a lot of volatility. It looks like it will be up, but where we're going to settle is up in question. So we'd have to take a look at that a lot later, maybe half an hour from now, to try to determine how that's going to affect us in the opening tomorrow. But so far, everything that we've seen, even if it's come back down, like PayPal, but everything we've seen has jumped up. So far, it's looking very good for the continuation of this trend. And we did start to get directional. We did break above this high right here and make a new high. And actually our open was right at that new high. Our close is above it. So we are now breaking out of that range. And it does look like that we can continue upwards for at least another week, maybe two. We'll hit that psychological resistance. At this point, it doesn't seem like there's going to be a lot of resistance there. And we may just be making our way up to this 25% move, in which case, or at that time, we would be very, very careful, because potentially market makers will start to run out of cash. And then we'll see if we get that big pullback at that time. For now, it's looking very good, very positive. Your hedges, if they were done in the style that I've shown you before, where it's just a baby amount of money compared to your portfolio, maybe $50, $100, $200, but it can give you $1,000 of protection or more, then this isn't going to hurt you too much. You're at most in a couple of weeks, you'll have lost that $150 or $200. And the rest of your portfolio, if it's large relative to that, should have made way more than $150 or $200 if you're pointing it overall to the upside in the direction of the markets. So that strategy is going to continue. I don't even call it strategy. That's just basic portfolio management. So we're going to continue to do that until it seems like we may get, or actually not until it seems like, until we actually get the event of breaking through the trend line. So there's not that much else to say. Let me take a quick look at TLT. TLT down a little bit today, closed where it opened, rejected that EMA 8 and came right back down. So more chopping sideways. We don't know if that's really going to be directional yet. It's more of sideways movement. And then we're going to take a look at, let me take a quick look at the VIX. Now, volatility is super, super muted. There's no fear on the parts of the market makers of it coming down. The other thing that I was looking at yesterday that I forgot to mention, the S&P 500, you see these orange lines that we drew? This was from January 10th. As of January 10th, this is the implied move for the year. So the market makers felt with roughly 70% confidence that we might trade as high as 537.22 by the end of the year, or as low as 413. In any case, they felt with 70% confidence that we would land somewhere in between these two lines by the end of the year. And what's really interesting to see is now that we're up here, closer to this 537 level, it's interesting to look at what the new opinion is of the market makers. So the way I do that is I go over here and I look at my SPY. I look at the end of year expiration or January of next year expiration. Technically, that's a leap, not an option. But if I go January 2025, I guess I could go December 31st, but I'm pretty sure we measured January last time, so we'll keep it consistent. January of 2025, the implied move right here is 70 points. 70 points from wherever we close at the moment. So that means we've got where we closed out 498, we'll just call that 500. So between 430 and 470 or 570. Okay, so you can see that everything is shifted up. 430 would be up here. 570 would be up here. And then the difference between these two right here used to be, what is that? 520, 120. 124 difference. If I divide that by 2, that's 62. Now we have a 70 spread instead of a 62 spread. So it looks like they're a little bit more uncertain. That's interesting to note. Okay. So everything has shifted up because the market has shifted up, but it looks like we widened our range a little bit. So market makers are less certain than they once were now that we've traded for a month in. So it looks like they're pricing in a lot of room for volatility. So that could be because of elections later on in the year, or maybe they're just saying, hey, we're really not sure. We're really not sure if this is going to keep on going up or come down. We don't really know. And that kind of fits the theme that we've been seeing the last couple of days. What's really interesting is when I looked at it yesterday, this spread was only, instead of 70, where is it? Right here. Instead of 70, it was actually 30 something. So I was really surprised to see it at 70 just now. But when I looked at it yesterday, it was only 30 something. So the implication was that the high was just a little bit above what the previous high was thought to be. And that low was way over here at like 460. So that was really, really interesting to note because that implied a complete skew upwards. But today we've widened out again, so that's no longer valid. So we'll keep our eye on that, see if we get any of those anomalies again where they shift the implied volatility back down. But for now, it looks like we're pretty much saying that we're range bound we're by the same range, but just shifted up for it to take into account the movement that has gone up in this past month. This is looking very steady. And if earnings aren't going to cause us to pull back, there's really nothing that is going to do it for now. So we're just going to expect this to keep on moving upwards. So far, the companies that are announcing tomorrow don't seem like they're going to drag it down. And then we'll be more than halfway through the earnings season, at least in terms of market cap. We're more than halfway through. So the remaining earnings are not going to have as much of a weight or impact on the direction of the market. But overall, it's looking very positive, and we'll just keep on following the trend. I think that's all we're going to see. We'll see tomorrow for sure how we open up, but this is looking just great. We might pull back to the EMA 8 a few times, but that's completely normal. We deviate from the EMA 8, we come back to it, deviate, come back to it, deviate, come back to it, come back to the EMA 20 for a deeper pullback, then EMA 20 again, then the EMA 20 again, or follow the EMA 8 up into the EMA 20. And then now we're just starting to separate a little bit from the EMA 8. We may do that for a few days, then come back to the EMA 8. We're just going to expect that to keep on moving upwards until something in the market tells us otherwise. There's some sort of stimulus or excuse for the institutions to start shifting their money. I wouldn't be surprised if there is a risk on feeling today. So if I go and I look at my sector scan, most likely we'll see money coming back into the riskier stocks, the technology, the discretionary retail. So let's take a look and see if my theory is correct. So SMH, so that's what I was talking about, the semiconductors, the technology, the consumer discretionary. Yeah, those are exactly the ones that have caught a bit today. So it looks like risk back on for now. Now we've been chopping back and forth, flopping back and forth every 1 or 2 days. But based on everything that I see right now, if I was trading institutional money right now, I'd still be going long. I'd be taking risk right now and then hedging carefully, but I'd be putting risk on. So that's the direction that we're going. And it's looking like that there is more room ahead for us to keep moving up. Oh, I almost forgot. I had a request. Someone asked me to look at a few specific stocks. So we're going to do that. The first one was Roblox, RBLX. And I typed that in incorrectly, RBLX. Roblox is a software game company. The kids, they play my kids and all their friends, they like to play Roblox a lot. They look kind of like Lego pieces, and they're running around. They build their own worlds and explore their own worlds. So they also came up with a lot of other games. It was a COVID darling, so did very well during COVID. And then after COVID, it came down, and it's been mostly trading sideways ever since. But it has been going in a range, sideways in a range, and it gets a lot of attention from day traders. Day traders love to trade in Roblox for some reason. I don't know why, but they do. And because of that, they actually get quite a bit of volume. So you can see that volume today, well, today was earnings, so they got 43 million. The average volume right now in the S&P 500 on a daily basis is like 70 to 80 million. So they do more than half the S&P volume today on their earnings day, and on average they do 8 million. Yeah, 8 million has been the average, and still that's like 1/10 of the S&P 500 on any given day. So that this name does get a lot of attention. And what we see right here is that it's been on an uptrend. It started before the S&P 500 did, and it's done very well, and it's pulled back a little bit, and with earnings it shot way above the MA50. So this one looks fine, looks great to me. We do have a bit of an indecision bar, so if I wanted to enter, I would wait a few days until I got clear direction of which way I was going to go from here. But on a longer term basis, there's no reason to believe that this can't, when we finally get the all boats rise with the tides scenario, this one should do very well. So Roblox is looking very good. The next one was AMPX, is that correct? Yes, Amprius Technologies. So Amprius Technologies, first off, I would want to know what they do. Okay, so I already knew what Roblox did. I don't know what AMPX does. So first thing I'm going to do is look at what does AMPX do. We'll go over here to bar chart, AMPX. I'll just get a company overview, see what sector they're in, see what kind of things that they do. So they're in miscellaneous electric machinery and equipment, which puts them in the tech industry. They manufacture high energy and high powered lithium ion batteries. So they are a provider of batteries. So I would want to see how they do relative to the lithium industry. So in order to do that, I'm not super familiar with the lithium names. It's not a sector that I normally pay attention to. So one way I would start looking at that, start evaluating it, is try to find the top lithium ETFs, because those guys do a lot of research, and I can just piggyback off their research. I don't have to actually go and look at everything myself. I can say, okay, well, these are the major stocks that they're investing in inside of the sector, and they're doing their homework. I know they're doing their homework, so I'll just take a look at, see where they're allocating their money, and then I can do my own comparisons from there. So I'll just pick this one. So we've got LIT, BATT, ICLN, and QCLN. Okay, so let's go over here and go to LIT, and I want to just see what is held inside this ETF. Albemarle, Sociedad Química, Tesla, Lucid, so it looks like some users of the lithium technology also. Piedmont Lithium, which has not been doing well lately. I was invested in that to the short side for a few weeks. So Albemarle is a major provider of minerals and resources, including lithium. Okay, so I'm not seeing AMPX, which kind of makes sense because they are a small, this is basically below $5. It's in the penny stock region. Okay, so let's see what's in BATT. Tesla, Li Auto, Albemarle again, Sociedad Química again. So these are going to be the market leaders Enersys was also in the other one, Solar Edge. Okay. Okay, so now that I have an idea, then I can compare how it's doing. So if I just go LIT, lithium, okay, lithium is going way down. PLL was way down. Enersys, ENR, Enersys, ENS, sideways. And then Sociedad Química, down, and Albemarle, down. Okay, so this is not something I would want to be in right now unless I was trading it to downside. But this is a penny stock, and it doesn't look like it's necessarily down itself. It's looking like it's more sideways. So what the other thing about this stock is that it IPO'd fairly recently. It looks like back in its IPO day was September 15th. The day it opened, it shot way up and it came right back down. And then it basically just went sideways. And it's been trading a little bit lower ever since. A lot of times IPOs generate a lot of excitement. And once that excitement is gone, the stock is dead. And it will stay dead for 1 to 2 years. This one's been dead for a year and a handful of months. So normally, after the initial IPO, I wouldn't touch a stock for a couple of years until I see volatility move into the name. This is kind of dead. And then I would want to see it trade back above. If it went down, I want to see it trade back above its IPO price, which means that the initial buyers would have recovered their money, or unless they just took a loss and whoever bought it from them has made a profit. And then people become a lot more comfortable once they're at break even, and that kind of loosens up the stock. So I'll give you an example. Like one of the very first stocks that IPO'd, the major stocks that IPO'd during my career, the very beginning of my career, was Facebook. So I think that was back in 2007, 2008. Let's take a look at Facebook, Meta. And it was a perfect example because there was so much hype generated with Facebook. So many people participated in it, and so many people lost money on the IPO, which is kind of crazy to think. I'm pretty sure it opened at like $40, $43 if I remember correctly. So this was the IPO. The open was 42.05. So pretty close. I was pretty close. You see how on the initial spike it went up, but then it traded down, and then it just kept going down. And then it was down, 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 and it just didn't get that much volatility. You can see that by the size of these bars right here. For, let's see, this was May of 2012. 2012. I thought it was a lot earlier than that. Okay, so maybe it wasn't at the beginning of my career. And then it wasn't until July of 2013 that we started to pick up again. So that was 1 year. And generally what I found is that it usually takes about 2 years. 1 year is actually pretty quick. But not until we traded around or above the IPO price did we really start to see activity pick up and we see a clear trend develop. Here it's just kind of going sideways and doing nothing. And if I just chop this graph off right here, I wonder if I can do that. I can do that. If I just do this, doesn't that look like AMPX? Let's go to AMPX. Doesn't that look almost the same? So I would wait. I would wait on AMPX. I don't care if it's an uptrend or downtrend or whatever right now, because it's too young. It's too young for it to really get institutional attention. Plus the dollar price is too low. And unless you get institutional money going into it, it'll never move very much. Retail traders are not going to push around a stock market. You'll see low volume, you'll see very choppy movement, and you'll see it get stuck in a range. So I would be in this stock until, maybe another year or so, until I see this trade back up to the IPO price. And then I see larger bars right here. The volume is actually pretty decent on this 500K. 600K, 500K on average. That's actually okay. That's actually not bad. But it's just that we don't see a lot of institutional participation in that 500K, or if we do, then it's not very many institutions, and we're not moving that price around a lot. So if you put your money in something like this, it becomes kind of like dead money. It just sits there. So you would be waiting a really long time before you saw any sort of activity that is meaningful. The last one I was asked about was CHSN, Chanson International. So let's see what these guys do. CHSN. Provider of bakery, seasonal, and beverage products, so it sounds like staples, through chain stores, principally in China and the US. Sort of like food market, staples related, penny stock, $1.52. So that already tells me to kind of stay away from it. It's a penny stock. Looks like it's probably low volume. 83,000 shares in the day. Average is 142,000. There's not enough. This is exactly what I was just talking about with AMPX. Is they're basically retail traders are the only ones trading this. And you might get a lot of hype where you might see runs up and runs down. But if you don't have institutional participation, it's not really going to move or go anywhere. So let's take a look at CHSN's chart. This is the chart. Okay, so they IPO'd recently as well. So they IPO'd in March of 2023, so about a year ago, and they didn't do anything. They came down, they moved up, they started to come up to that region, and activity did pick up right here. That's what we were talking about. But the problem is they were always a penny stock. So all of this is kind of retail, maybe something, and then something happened right here. Something really interesting happened right here. Suddenly we start to get these huge green bars, and it's only over 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions. And then in one day, we completely undo that huge movement, and we close and we stay below forever the original range of prices. So before this event, we were trading around $1 to $3, $4, and after we're at about $1. Okay, so actually here it's like closer to $2, $2 to $3, $2 to $4, and then now we're at $1.50. So this movement down, this bar in a single day was an 87% drop. So that means over here, on the way up, we saw gains of 36%, 64%, 33%, 31%. We went from about $2 to a high of 19. Okay, so we went 900 times, 900%, 1,000% up, and then a single day, we lost all of it, and then some. This is what a pump and dump looks like. Someone on the internet, someone on robocalls, someone on emails is calling around, putting out word like, oh, this is the next hot stock. Oh, you're going to make so much money, and making all this hype around this stock, and people got excited. And we see buying in, and that buying in seems like it is proof of exactly what they're talking about. Hey, I got this hot stock tip, and look, it's true. Look, in a single day, we made 64%. Oh, look, it's going to keep on going. It keeps on going. It's going to the moon. It's the most exciting thing ever. And you know what? I don't care if it's a pump and dump, because I'll get out on time, until in a single day, you're completely wiped out. So this is the danger of penny stocks and pump and dumps. I would avoid this one, because once a pump and dump happens, no one trusts the name anymore. So we're going to see dead volatility like this for years, maybe forever. And it'll never recover. So a good example of this was the marijuana stock craze. So if I just MJ is the ETF. So if we look at just the ETF of MJ, we can see that it sort of followed this pattern, and now it's getting eradicated. It's only at $3.85. We started at 25, 26. And then there were periods where people got super excited and people were talking up the cannabis industry. And hey, it's being legalized in several states. Hey, their banks are going to fund these places now. We have congressional approval for financial institutions to provide banking services, to provide loans for the cannabis industry. All of this, these are all these news events that we get that generate excitement, but then they just dump off. Now, this is the ETF. So imagine what it's like for an individual stock. So Tilray, marijuana, cannabis, Tilray. Is that right? Tilray? Tilray. So Tilray. TLRY. Okay, so this should be, let's take a look at what happened with Tilray. There we go. We IPO, it gets super hyped up because cannabis is the next hot thing. We start at 22.75. We trade as high as 200 or 300 just over the course of a couple months. And then in a single day, bam, 2-3 days, we're back down to 100. And then it never recovers from that. It just slowly dies off forever, all the way. You see that? We got a little bit of hype right here. We got a little bit of excitement. This was around the GameStop era, I think. We get hyped up just like GameStop got hyped up, but not nearly as much. And then we die off. And then we just stay dead forever. Look how thin and tiny these lines are getting. So these are pump and dumps. And you want to avoid pump and dumps because there's no way. The only people who make money in pump and dumps are the people who are pumping it and the people who get lucky enough to exit in time. And we don't want to think that we're lucky enough to exit in time because you never know. Just like in that CHSN, it just a single day, everything gone. You don't necessarily have time. Even if you're watching it, day trading it, you don't necessarily have time. I wonder if I could go on a daily basis on Friday, December 13th. Let's go to the 1 hour chart on December 15th. There we go. Is this? Yeah, that's the day. So let's go to a 1 minute chart. December 15th. Okay. So this is December 15th. Everything looks great and fine and normal until 7:48 a.m. So if we think we had time to get out, in 1 minute, we went from 1450 down to 13. Then in the next 2 minutes, we were down at 1150. And then in the next 1 minute, we were down at 5. And then in the next minute, we're at 475. And then we have a slow movement downwards. So in 5 minutes, we were at from 15 down to 5. So you could not have traded in between 1150 and $6. So that was an automatic $5.50 loss. That was an automatic 50% loss right there. There was no trading in that region. So we cannot expect to think that we are going to get out before anything dumps when it comes to a pump and dump scheme. So unfortunately, this one, I would say that if you're in it already, get out because your money is just going to be dead forever in here. In my opinion, I could be completely wrong, but that's what it looks like to me. It's just going to be dead right here. It's just going to flit around $1.50 for the rest of its existence. Or slowly bleed downwards like Tilray, slowly smaller, lower, and you'll just die a very slow death. Or the money that you have in it will die a very slow death. So I would suggest if you're already in it, get out and just whatever amount of money you've got left is what you've got left. If you're not in it, stay far, far, far away, because this I highly doubt this stock is ever going to go anywhere. So those are three very different and very interesting examples, kind of like all over the spectrum. So thank you for that question. Hopefully you learned a lot, and we got to see a lot of really interesting examples in how I go about looking at and evaluating whether something is worth my attention or not. So that is it for today. Have a great rest of your day, and I will see you tomorrow.